Elon Mui, thank you. Let's get a little more reaction to Larry Kudlow's comments and bring in Steve Odland, who is the president and CEO of the Conference Board. And we'll also talk about consumer confidence, Steve. I assume you heard some, if not all, of Larry Kudlow's sort of summation of the state of play with respect to trade between the United States and China. What do you think? And do you think business heard what it wanted to hear?
Well, this is what Larry has been saying privately to CEOs as well as other members of the administration as they've gone out through the business community behind the scenes, and they have said repeatedly, we do not want a trade war with anyone. We are trying to take steps in order to equilibrate the situation so that we can sit down at the negotiating table and collectively work these tariffs down so that it's a much fairer situation and much freer trade. So what he said today is very consistent with what is being said behind the scenes. And if you just think about negotiation 101, the administration can't come out and say, here's where the lines are, or here are the decision points. That would be giving away all of your negotiating strategy. Essentially, what they're looking for is IP protection. They're looking for movement on the Chinese tariffs and opening in the market, all the logical things you would expect. Now, in some regards, China has allowed this to happen on their own in the sense that they've only allowed about 5% of the U.S. exports to go to China. They've put barriers such that it's not a big deal to the U.S. if those tariffs get raised further because there's not much of an impact back. So in some ways, this is the best of all times to do this before it becomes an even more important trading relationship. And our hopes are that it will become a very important, even more important in the future, but a fairer relationship.
So, what you're saying there is that such a small amount of U.S. exports go to China that it isn't really material economically to the U.S. On the other hand, an awful lot of our imports are from China.
That is true, and that's the flip side of it, and that was the question on, isn't it really just a price increase? And if it goes through, and if it works its way through the supply chain, and if there are no substitutes from other countries, all of which, by the way, is being worked on by U.S. businesses, if all that came through, well, then, of course, there would be some inflation in the marketplace. But I think the point of the negotiation and the reason there was equivocation on, are we going to put in the 25% versus the 10 is because they really don't want to. They really would like to get this deal done. And all of this conversation has been going on outside of the dinner, behind the scenes. And, of course, that is all, complicated with moves that have happened in the South Sea and the islands and so forth. So this isn't just a one-issue deal between the United States and China. It's a very complicated relationship.
Confidence is very important to the market, Steve, whether it be consumer confidence or business confidence. You're the head of the Conference Board, which measures confidence. And so, if the tariffs that are currently in place ratcheted up to 25%, if the next round of tariffs were put in place, what would that do to confidence? Because while, yes, the argument that the amount of Chinese imports is small relative to the size of the U.S. economy, $500 billion versus a $19 trillion U.S. economy, the dent on confidence could be huge, and that in turn could have various ripple effects.
It's a great point. Conference Board just came out with the Consumer Confidence Index this morning for November. It showed just a very slight dip versus October. It was more consistent with September. These are at 18-year highs. The expectations index for the next 6 months are very strong, and that revolves around the jobs market. We don't see any impact so far from the discussions or the threats of tariffs, largely because there hasn't been any reaction or activity in the marketplace. There has been no result that consumers can see. But you are right, 70% of our economy, our GDP, is driven by the consumer. Confidence then drives that. So if we've got to get through this situation and get to a fairer trade level, if these things do ripple through, which nobody expects them to happen, it would have an impact. But look, these numbers today are very strong, continue to be a long-term trend, 18-year high. It says that we're going to have a great holiday season. We've just come off a very strong Black Friday, Small Business Saturday, Cyber Monday. All of these things are being branded now. But it's going to be a record holiday season. It's going to be a great finish for the year. So next year we're going to have to lap it.
Steve, it's Dom. We know that the narrative is positive. We know that the consumer is strong, but we still did see a down tick for that consumer confidence number. So what is it about the outlook 3, 6 months from now and beyond that has consumers worried possibly? Is this an idea that we could see peak consumer confidence at this point?
The downtick is back to September levels. This is a monthly ripple. You have to remember these are 18-year highs. What we are seeing, though, is it is a plateau, Don. It's not growing from here, which means this is about as good as it's going to get. And the Conference Board's GDP expectations show that it should be about 3% growth in the first half of the year, and that should decline to a 2.4% growth in the second half of the year. So we are predicting this, this slowing of growth, but that's lapping this great stimulus through the tax situation. Now, some things that could help in the first half: raises, 3% job growth or wage growth rate, so, whoever gets bonuses, tax return, and so forth. So we've got a lot of positives in the front end. The question is the back half of the year.
All right, so a lot of stuff to consider there. Steve Odland, President and CEO of the Conference Board, thank you so much for that breakdown, not just of Larry Kudlow's comments, but the consumer confidence numbers as well, Tyler.
All right, folks, so as the